Good morning, good afternoon, good night, wherever you are tuned in from. Welcome to the BitLab Academy daily stream. My name is Kellam. Welcome to the show. How was your weekend? Did you sit on your hands? Did you buy? Did you sell? Let me know in chat. Did you wake up feeling grateful today? Throw a 1 in chat or put in hashtag grateful, because we got to remember, no matter what's going on in the markets, no matter what's going on with our money, it's only one aspect of our lives. We have friends, we have family, we have pets. We have blue skies, we have gray skies. All these things are important to us to live. We don't just want sunshine. We need the rain so we can water those plants in our lives. So we need to make sure that we are grateful regardless of our circumstances. And again, I just want to say how grateful I am that all of you are here and a part of this community with me. It's a wonderful thing to be able to share the experience that I've gained over the many years I've been in crypto. My mic is acting funny here, but I'm grateful for it. I feel very grateful that I'm able to share the experience I have and things I've learned and things I'm still learning along the way. So we can break down all these things that's going on in the charts, figure out, I can show you what I'm looking at when there's price action like there is over the last few days. Should this be scary? Is this a buying opportunity? Should we be sitting on our hands? Should we be shorting? Well, we're going to be breaking down a number of charts today because right now is a perfect exposition of how frustrating a market could be, especially when you need the price to do something. If you need the price to go up because you allocated more funds than you really should have, and you're unable to pay certain bills, or you were trying to double your rent, but because a friend told you or a channel told you the market was absolutely going to go up from here 100%. Well, first off, anybody that tells you 100% anything other than 100% they don't know the answer is somebody that you should not be listening to, because at the end of the day, all we're doing here in these markets is we're trying to stack probabilities in our favor so we can take highly probable trades. And with that, know that the market will go against us a lot of times, more often than it goes with you. So how do we contend with that? Well, I'm glad you're here. And I just want to say, hit that like button, hit that subscribe button, ding that bell right down below, and shout out to Hit Merch. This is one of the new hoodies we've got, Hit Merch, which you can find over here. Well, first off, come and follow me here at Kellam. Make sure I found about 5 more fake accounts out there. So make sure you're following the right one, Kelloy, Kellam. Not OM, not UM, not Kelham, it's Kellam. Just make sure you're following the right one. We're going to be breaking down a bunch of stuff today. I actually have some tweets I did over the weekend I'm going to be talking about as well. Where are we at? Make sure you head over to BitLab Academy as well, which is at Academy BitLab, and come down to this tweet that we just did 9 minutes ago. You can also, if you're watching this later on the day or over on Hit Network, it's okay. Come and follow these different accounts I'm showing you, because there's a lot of great content. And on this BitLab Academy account, these retweets, you've got to like BitLab Academy, go or follow it. I should say, go and follow this post and retweet and like this post. Throw a little heart on there. We basically use the people that are helping support our community. I don't want to say use. Let me rephrase that. We want to be able to give back to those that are supporting our community. And so on Fridays, we do a random drawing for all the days of the week that we did a stream. And from those days, whichever day the spinny wheel lands on, then we go and then we draw a random name. And in order to qualify, you have to follow BitLab, retweet, and like the post. So with that being said, I'm not going to say with that being said anymore. So how's everybody feeling? Let me know what's going on. I'm going to go ahead and read through chat here for a second. We got Alex Green was the first one in the house today. Shout out to my boy. Everybody throw 1 in chat and appreciation to Alex Green. Alex Green has been working tirelessly. He's got a big family business there where he lives, but he's also working alongside us here at BitLab Academy. This monumental task of getting the new BitLab launched. And he's been really helping a lot with the process there, because it's not just filming some videos throwing up. We have a brand new website. We have all new courses, all new content, quizzes for every lesson, plus course quizzes for the cumulative sort of review, as well as, there's the email support, the frequently asked questions page, the content for the web. There's so much going on. But back to the hoodie. Shout out again to Hit Merch for the new hoodie that they've got, and that is you can find right here at hitmerch.com. We've got a bunch of stuff here from the Frankie Candle stuff, Bitcoin, just ADA gang, around the blockchain, Candle Mafia. I'm not sure. This is the latest. I'm not sure if the BitLab Academy content is on here yet. Let me see. Yeah, BitLab Academy stuff's not on here yet, but that will be going out very soon. And the mods, shout out to you all. I'm getting the packages prepared to get you all that sort of appreciative send out with the merch for you all. So what did you all do this weekend? And I want you to realize, if you didn't trade this weekend, that could have been just as productive for you in crypto as trading. Sometimes trading goes against your ability to move forward in the space. Why do I say that? Because you don't need to take every trade. Sometimes the best trade is no trade. Because if you don't have the probabilities lined up, or you're not feeling confident in a trade opportunity, then that's a great sign that you should sit that out. Or if you really want to, be involved with it in some capacity, then go and paper trade. You can go, there's a demo trading ability within TradingView, as well as most exchanges have paper trading as well. And go and, you can just go through the repetition of making trades as many times as possible, especially in demo accounts without your money first. So you can go, if you're not feeling confident consistently, go through the motions of what say you're going to trade with $100 or $1,000. Everybody is at different levels everybody has different levels of capital available to them, and also a different level of risk tolerance and the timeline that they're looking at. So if you really, really want to do well in the space, don't just jump in because you see me, or you see Frankie Candles, or you see Crypto Face, or you see Investing Bros, or you see, Gareth Soloway, people that have been in the space for years, some more than others, but we've been in this all day long, every day, more than most people are able to, and there's years of experience and thousands, maybe even tens of thousands of trades that have been done. So when I enter a trade, I'm fairly confident in the trade, and it also doesn't bother me if the trade goes against the direction that I was betting on. The trade, I would say I'm going long or short, the trade reverses the other way, or stops me out, and then because it's going down, and then it continues the same direction that I had planned on anyway. That doesn't make me change my strategy. One of the things that makes so many people lose money in these markets is they make a good call, they make a good trade, and they have a stop loss, which is good. You should always have a stop loss. Unless you are a professional, you should always have a stop loss. Even with the professionals, a lot of times the reason they don't have stop losses is because their stop loss, in essence, is betting in both directions. They may have a $5,000 trade or a $50,000 trade, just name the number, the number's irrelevant, going long, and then have a leveraged short, basically covering the opposite direction. So they are protected regardless of the direction of the market. If you're not a professional trader, but let's be honest, 99% of the people watching this show aren't, and that's perfect. That's great. That's what this show is all about. This show is all about bridging that gap from beginner to pro to give you the tools so you can confidently trade this market. So if you are still learning, which I would argue all of us are, we need to have healthy risk management. We need to sit on our hands more than we actually take trades. And when we do take trades, we need to practice healthy risk management. And getting back to how most people lose money is they will see a setup and they'll be excited about it, and they take the setup. They take the trade. Let's say they're going long. We can come over here onto the chart. I'm going to pull this up right now. So say somebody bought this dip right here. I'm going to double click on the chart, minimize those indicators on the bottoms, just in case you didn't know you could do that. So say this pushes up, comes down, pushes up, and somebody, bought this dip, not the top, but either or. But let's say you're trying to make smarter moves, and okay, this dip, okay, you missed it. So now this dip, you buy this dip, and it goes up and you feel great. And then it comes down, and you You don't adjust your strategy for the new data in the market because every second there's new data in the market. But so you're not, especially at this point, this is over a couple days, and you don't adjust your strategy, and then the market falls out. It starts breaking down a little bit, and you have a stop loss. Let's say you did end up keeping your stop loss. It's getting down near your stop loss, but you are so directionally biased on this price action going up that you didn't want to take the loss because now this is below your entry point. It still hadn't hit your stop loss, but it's below your entry. And so because you're underwater, your lack of humility and understanding that most traders lose more trades than they win. The difference is profitable traders have a healthy risk management strategy that they stick to. And it's okay to lose 7 out of 10 trades, because the 3 that they actually turn profit on, could be 8%, 14%, 70%, or 1,000%, whatever it is. But they're losing 1%, 2%, 7 times in a row. That's fine. But then on the larger swings they're taking, on the larger on the trades that go in their direction where their stops aren't hit, then they can turn large profits and they can be profitable over time. Because what happens here is if you do move your stop loss because you're underwater and you're zoomed in on the 15-minute chart. Let's go over to where that breakdown was. You're zoomed in on the 15-minute chart and, right here, and it starts going back up. Like, great. And then, you don't even notice that you have not only a head and shoulders right here. If we really zoom in on this, we could see we have shoulder, head, shoulder. But then we're just dancing, boop, pop, 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 pop on the support. And the more you touch a support, in this case, this kind of would have been the support region right here. The more you touch support, the weaker that support gets. It's like if you had, a rock and you're just tapping on glass, tap, 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 tap. At some point, that glass is going to shatter. It may take 10 hits. It may take 1,000 hits. But the point is, you're weakening the structure of the support the more times you touch it. And not only that, we see this bounce and it comes up. And then we see this as a lower high. So this is a weaker bounce. So this is the bulls are losing momentum to the upside. Now look at this. This is basically a small time frame bull trap, because this pushes. Now this goes, yeah, we're going up. Commits these people. The price action got to these levels because somebody was willing to buy here. Emotional traders. The market turns. I want you to hear me right now. The market turns, and profits in professional traders' wallets turn and grow due to emotional traders. Because they know if they're able to push price action in an exciting way, the majority of the market, it succumbs to FOMO. They succumb to fear of missing out. That's what FOMO is. Also, it's greed, because you see it pumping, and so you have to take advantage of it rather than being patient and waiting for a pullback and to see on the subsequent pullback, is this going to, for instance, just on this move alone, option F from the top gives us our fib. Look at this. We zoom in on this. Look at this. This reached basically right up to the golden pocket. Look at that. So if we can't even bounce here on this pullback, this wouldn't have been the worst thing in the world. But because on this bounce here, we could not even get past the golden pocket, this would not have been a trade. This is the emotional buyers buying the short-term hype. They donate their money to people with more money. They donate to people with more of a strategy. Price action comes down. We have the fib from here to the bottom. Now this could not even bounce and get up to where the golden pocket is. So in this case, it's like, now we know we've had this lower high structure. Now we know that this is a washout structure. This is taking advantage of the longs. And then we got some people going short, and then it's basically trying to shake out the shorts right here. And we're getting this. And then what happens is, even if somebody took this position back here, as we were talking about before, somebody took this position here, then, and at this point, it starts breaking down and people start moving their stop loss. They may have started with all the right strategies, but they start moving their stop loss closer and closer to, if you're on leverage, which I don't recommend for anybody that hasn't gone through all of BitLab Academy or hasn't done 1,000 trades or more and really honed in your style, your strategy. people, you know, they start moving their stop loss closer and closer to liquidation, or to the point that it's just, you know, they end up losing, they end up not basically trading spot, and this breaks down. And as this breaks down, let's say you're not trading on leverage, you're trading spot. As this breaks down, people get scared because this is falling, you know, and what happens is they jump. This is like a building. They jump out of a window, and imagine this window being upside down. So they're jumping out of a window here at the top of the building, right? Because they could have just had their stop loss be hit, lose the 1%, lose the 1.5%, whatever it is. But because they are tied to the emotions governing their trading decisions, they take the worst decision. They bought here, which was not even arguably this would have been an okay trade had you been aware that you're also trading within this sort of zone. We did break out, but we did have a look at this head and shoulders right here, shoulder, head, shoulder. It's very kind of sideways. But once we broke below this could have been a buy for a very small time frame period, but I would have been very, very, very aware of this previous, these previous support sort of zone right in this region. And I would have, if I didn't take profit, I would have at minimum, if I bought this on a scalp, I would have bought this. And then as soon as this pushed up, I would have moved my stop loss into profit. So even if I didn't do anything else, when this came down, if the price did come back down, I would inevitably be in profit regardless. I would not have lost any money. But then right here, as this bounces, okay, and we break out of this level, I would have moved my stop loss to just below this high right here. Okay. So now this price pushes up, pulls back a little more. Now this price action breaks this high here. So I would have moved my stop loss up to this level here. If I were scalping, this is what I would do. This way I'm moving my stop loss into more and more profit as price action is demonstrating that it's breaking those structures. Now, I would not have necessarily probably taken profit right here at the top. I wouldn't have had that as a target. I would have left this as an open trade where my stop loss would have been, if I was trading here, if I took this trade on anywhere in the wick, my stop loss would have been right at or just below this support level. And then as I was saying, as the price action was moving up and breaking levels, I would have been moving my stop loss up. And then at this point, my stop loss would have been moved on right here. And I'm on charts all day long, so I can do this. A lot of people aren't sitting staring at their charts, so they're not able to do this. If you're not able to do this, then you need to find a different strategy that works with you. Because look at this. I'm looking at the 15-minute chart. So on this 15-minute chart, what I would have done is I would have come down to 7 minutes because we're seeing a lot of, on the 15-minute charts, a lot of wicks in the chart. So here we go. So that means that there's price action, there's more resolution on smaller time frames. Come on, there we go. So I would have moved my stop loss up to about right here on this candle, and I would have had an alert set on this price action top. How do you set an alert? Well, we can double click actually here. Right click and add alert. Now you can go crossing. You see that? I'm going to do that again. You go right here, right click, add alert. Now you can do BTC crossing. You can do crossing up, crossing down. You can just do crossing for either way. And you can set the price of what is this level right here? So I already have it there, 30,536. So this would have signaled me, and I would have set my stop loss right here. And then this would have immediately been stopped out within under 0.2% slippage from the topside target of this range. So I just want to point out, we all need to understand what we are capable of. And that means logistically, not just talent wise. It's not about that. Sometimes you need to be honest with your life circumstances, what time allows you to do, how much focus you can have. And if you're working, 60 hours a week and you have 2 kids and a dog and an aunt that's sick that's living with you, you don't have time to scalp a 15-minute chart. Maybe something that will work better for you is zooming out here, on the smallest time frame, daily for the structure, and then maybe an 8-hour or 4-hour for where you're going to pull the trigger on the trade. But you need to understand what works best for your lifestyle and also for your skill set. And now I will say, if you want to learn fast, MDX Crypto, we had one of our guests on the stream last week. He made an excellent point, and I do want to point this out. If you're taking, trades on a 3-day chart, then you're going to be taking very few trades over a very long period of time. So if you do want to accelerate your growth and your being able to read the charts, is if you can allocate, even if it's 1 day a week, 4 hours a week, where you sit down on a Sunday morning or a Saturday morning or a Tuesday night. It doesn't matter when it is, what matters for your schedule. And get down and get into the demo trading, the paper trading on TradingView or any of the demo trading accounts, and trade on a 5-minute chart with not real money, with fake money, but do it with the similar amounts that you'd be trading with out of your own portfolio. Because if you're trading with fake money, with hundreds of thousands of fake dollars, and then you get in there and you're trying to trade with $500 of your own money, you're inevitably going to go and trade leverage high X because you don't like seeing the number so small. Practice trading the same way you would trade in real life, and do it on a smaller time frame chart for 4 hours with fake money, because you'll go through the process of doing limit orders, doing market orders, doing stop limit orders, doing all the things, whether it's longs or shorts or, understanding what's going on in the order books. Understand that you can see buy walls or sell walls. Maybe there's not a lot of liquidity. And by the way, just to shout out, and I'm so excited. I've been saying this for about 2 months because it has been the case, but we're coming ultimately to the point that we need to get the new BitLab Academy launched. And we go over all this stuff in BitLab. We break it down, individual courses, individual lessons. So in the new BitLab Academy, which we are, actually, let me do that again because I'm going to create a little clip out of this. In the new BitLab Academy, we have all the things you need to succeed in crypto, from the beginner, most basic definitions, crypto wiki, blockchain 101, Bitcoin 101, Ethereum 101, all the basics just to get started. And those are free courses. And then we also have the paid members area that has everything from trading fundamentals, trading strategies, on-chain data analysis, candles, candle patterns, everything you need to really understand how to navigate these markets. So coming over here onto my screen, we can see right here, this is the new website. We have a lot of stuff changing here still on this. We're tying up some loose ends here, but in terms of the courses, you can see here, this is the first round of updates. We're gonna be doing updates with new content regularly over the course of the next, indefinitely, over at least the next 2 or 3 years. Every month or two, there's going to be a batch of new courses, new lessons, new resources, new tools. In addition to all of this, we also have the members Discord that allows you to have support along the way, so you can engage with other BitLab Academy alumni, as well as different people that are here on our team, sharing charts, sharing strategies, doing, we're going to add a feature also, a special feature that's basically monthly masterclasses with myself and Frankie Candles and Ben Armstrong and a bunch of other, basically around the crypto ecosystem space that are guest experts within the field of, whether it's price action or trading or on-chain data analysis. We are going to provide you every tool you need to understand and break down these markets. Again, whether you're a beginner or a pro, we are going to have strategies for you. And I cannot wait to see you inside the new BitLab Academy. Sorry, I just wanted to get a little cut there because I'm going to be sharing that. Because if you can't tell, we're getting very close to launching this. Now let's talk a little bit more about price action today, though. Let's talk about where the market is today. Now, I didn't ever shout out all my people. I just started, do that real quick. Alex Green, Crimson Caravan Company, Shake and Bake, and I helped. Alexander G, Scott Rod 17, King Peasant, Learning. Let's see, who else is in here? Alexandra G, I can't remember. Yeah, I said your name. Chemistry Bro, glad we got you on as a mod, my friend. Karen Swigart Harris, Crypto Kid, Granny's Garden, unforgettable name. We have so many familiar names in here. Blazing 2Js, GS, we've got the family in here. Hashtag BitFam, that's what we are right now. I love you all. I appreciate you all being here. Let's talk about what's going on in the markets today. If you have not done it yet, hit that like button right now. We've got, let's see, we've got 186 people in here, only 70 likes. Hit that like button, hit that subscribe button, ding that bell. Help support it. Really, it's the easiest way you can help support this kind of content. When we're putting all this stuff together for you, ding that bell so you can know when we're going live. Now, how do we navigate a market like it is right now when ultimately I think the majority of people want the bullish case to play out for the markets? Because the majority of the people aren't professional traders and they don't really understand longs and shorts and making money in both directions. And in addition to that, if the market is going up, that maybe that's it more broadly helps the crypto ecosystem, because when you start getting very good price action, you also get incredible news media coverage about it too, as people start making more and more money. But then again, those things can also end up be signs of a top. So what we want to do right now when we're looking at the price action of Bitcoin, I'm going to delete this Fibonacci. When we're looking at the price action of Bitcoin, let's go back out to the 3-day. We can see that we have this descending wedge here, this candle pattern structure, this chart formation, which is a bullish chart formation. Excuse me. I got the hiccups this morning. We got this, and this has broken out bullish. But what I want you to notice here, these are two parallel lines. It's crazy that these two support points right here is an equal, basically parallel line to this structure here. So we have broken out of this sort of channel that we had very loosely formed, because it's interesting just because we have these two resistances here and these two supports here projected out. We can see that this also came a resistance right here. And then we've broken out and not only got up to basically the top side of this range here, not all the way to the top, but in the upper 4/5 of this sort of price action consolidation range here. This is a Luna collapse right here, and then consolidation, and then ultimately breakdown as we saw the cascading sort of the cascading contagion sort of trickle through the rest of the crypto market. And we could see that this is broken down. This is one formed out. This is the macro. This is a midterm, and then this is the smaller time frame here. So you see, we want to look at the three different market cycle structures: the larger time frame, the medium time frame, meaning over the course of a few months. This is over the course of a couple years, and then this is over the course of a couple days, right? Now you can break that down further. You can go, ultimately all the way down to the 1 hour, and get into much smaller. But the point is, we have market cycles on every time frame. Now we can see we have a broadening wedge here, which is also aimed to the upside, which is ultimately somewhat of a bearish structure. And what I want you to notice is on the 3-day, this sliced right through this support right here, this previous resistance. But if we come down to the 4 hour, we can see that this did kind of stop right at this zone. Look at this bounce right in this region. I had this box here from before that happened. This bounced right at this region, which was this ascending level of support on this basically bull pennant or symmetrical triangle, however you want to describe this. And we have the support and resistance, which was a good stopping point, and of course all the volume that we have right here, this shelf of volume. So price action took a little breather there. We got committed people going long, shook them out. Now price reversed and broke directly through this level. But what I want you to notice is, remember when we were talking about this larger term time frame, this parallel channel that we have here, is the fact that this parallel channel is now acting as support. And we can look at this as a region, because we can see back here, this is basically, we can actually draw it a little, we draw this a little bit better. We can do this like this. Yeah, that's a little bit better because we have 1, 2, this almost touched, and then boom, boom, boom. This could go a little bit further. There we go. Yeah. So if we look at this, and I was, by the way, I was looking over here, not here when I was looking at this, but now looking at this, now that the line, this is bounced perfectly on the support line. Now, will this hold? Will this hold this level, or is this going to fall through and come down ultimately to this sort of target box that I have down here if we do break down? Well, let's go through some of the charts and the data that I wanted to cover today, because there are some mixed signals going on in the markets right now, both bullish and bearish. And that's to be understood because there's a huge uncertainty of what's going on in global markets right now. And we have, in addition to that, we have, where's it at? If you have not yet, get over here to the BitLab Academy Twitter page right here, which is at Academy BitLab. I'm going to put this in the chat and come and retweet this. A retweet to win. You're going to be entered to win if you retweet this. I'm going to pin this to the top. There we go. Retweet this page right here. Actually, let me cancel, remove. I shared the wrong link. There we go. All right, there it is. You guys got the point. I'm having issues with my keyboard because I had to switch keyboards today. Retweet this tweet right here. Be entered to win. But what I wanted to share is this right here. So this is a pre-election year aggregate cycle seasonal pattern, 1949 to 2021. Take a look at this chart. Let me know in chat. This is being inside Kelly's mind. Yes. Yeah. I'm a little ADHD, always dealing with different environments and having to figure out how to operate all this gear around me to run because I run the show, basically the live show by myself, which is hard to do all the production as well as the stream and read the chats. And so I appreciate everybody's help and patience. Now, what does this chart show you? Let me know what you feel like this chart is suggesting about markets. Let me know in chat right now. This chart, what this chart is trying to display is essentially how the S&P 500 in the pre-election year, by the way, which is this year is a pre-election year. So this has been from January to December. We can see this has been up with the correction and continue up essentially. It's been up. This is the S&P. This isn't even Bitcoin. Is this going to be a change from the norm this year because of the global uncertainty? Or is that money printer inevitably going to come back on? What do you think? Throw a 1 in chat if you think the money printer is going to come back on. Throw a 2 in chat if the government doesn't know what the hell they're doing. Throw a 3 in chat if you're just having fun watching the show in terms of the government's show of having no idea what they're doing. Because as this looks, Crypto Burb, who we've had on the channel here, go and follow him if you haven't yet. He says, the pre-election years are the best performers within the presidential cycles, with only one loser in 84 years. In a way, price action and weather are similar. The future is uncertain, with 98.9% chances being a bear in 2023. With 98.8% chances being a bear in 2023 is like betting on negative summer temperatures. Now, while I won't 100% agree with this, shout out to everybody in chat, 1, the 2, and the 3. Yeah, that's right. Yeah, I mean, everybody, is it not incredible right now to be in the position that every one of you are in also? Everybody watching this channel is in the position where we are starting to have a deep understanding and a growing understanding, let's put it that way, of the paradigm shift, the opportunity that lies within blockchain and Bitcoin and the crypto ecosystem, digital assets, the digital technology sector, digital finance. And I'm sure all of you, throw a 1 in chat if you agree with this. Talking with family members or friends who have no exposure at all to Bitcoin, it's sometimes frustrating to have to either ignore their narrative talking points that they heard from Jim Cramer or some Janet Yellen, or you have to figure out a way, how do I talk them out of thinking this, or you end up in an argument. Have you ever had any of those sort of frustrations with people because you're gaining a deeper understanding and you can see past the false narrative that the news media shines on crypto, past the false narrative that Janet Yellen and Gary Gensler shine on crypto and Bitcoin and Ethereum and the digital asset sector. We can see past that, and we see the growing adoption rates. We see all the data that's present, the transparency that is available within the crypto ecosystem. You know, if we come over here to Look Node, let's see, go to addresses. This is the addresses with a 0.01 balance. This has just been essentially up and to the right with a large hype cycle right here on the 2017 cycle. And then look at this. We never really got a hype cycle on the 0.01 addresses. We got a small bump, but we didn't get a hype cycle like this. This was really, I would argue 2017 was a year, 2016 into 2017, excuse me, into 2017, and then into this break. This section of time right here, actually, let me pull up my chart because the chart's not up. This section of time right here was the section of time that Bitcoin really entered the mainstream media fold. Now, here was hype because everybody's like, oh my God, we're up to $20,000. And, you know, the mainstream media not being held accountable for pushing hype in these sort of levels, whereas you have YouTubers that get sued in class action lawsuits because they're talking about stuff that every mainstream media news outlet in the world is talking about, but YouTubers get slammed. It's kind of funny about that. But my point is, this is when we really entered the mainstream consciousness. This was not even like fully, just in the Western world and the US and the UK and some other parts of the world as well. Well, the news coverage around Bitcoin and crypto in this area right here exploded. And we see this also with the increase right here. We can see this hype cycle forming right here. Now, if we come over here to addresses with over 100 Bitcoin, we can see that these people already had gotten smart. See right here, they're starting to reduce their positions because they're selling Bitcoin. People are selling below, they're taking profits on some of their Bitcoin, and there's fewer addresses that have 100 Bitcoin. So they're taking a little increase here on this dip. You notice that? Look at the dip, increase. Smart money buys on key dips and sells into strong bull market. So we have the strong bull market reducing position here. You see that? We see this even more clear on the 10,000 plus Bitcoins with greater than 10,000. Look right here. Zoom in right. You know, we have to understand the market has been maturing over time. And so there's a bit more weighted preference towards the last year and a half versus like 2010 to 2013, because that it was still very speculative. It's still very speculative now, but it was exponentially more speculative in 2010, 2012, 2013. But we see right here, there's this increase. People are still buying at these zones. Even right here, look at this. This is a economic shutdown, March 2020. Look at this. Look at how much the large wallets. Look at how many wallets. Look how many new 10,000 plus wallets increased right here. Who are they buying from? They're buying from people that are fearful. They're buying from people that are emotional. And then I'm just pointing this out because everybody right here was thinking markets were still going to go moon, 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 moon. Even right here, moon, moon, moon. And what we can see is the largest cohort of wallets, 10,000 plus, just dropping. I mean, dropped all the way down to 80. So from 112 to 80, that dropped 32 points. So 32 addresses, which doesn't seem like a lot, but that's tens of thousands of Bitcoin that were selling pressure. And look, they're selling into people buying hype. Now, what I want you to pay attention to, and we're going to come back to this chart, is right here, FTX collapse. Look at this large increase by the fear. That's the hardest thing to do in markets, is finding the data that can help support you seeing a highly probable, profitable trade in a moment where the market is ultimately fearful as it can be. And there's data that supports why it's fearful, but the retail is looking at this data, which is the narrative focus, but the smart money is looking at this data, which is the fundamental focus. So I want everybody, as much as we look at price action, as much as we look at these charts and we see we can form lines and have technical analysis, I want to challenge you all to come over to looknode.com or lookintobitcoin.com or Glassnode. Looknode and Look Into Bitcoin both have free on-chain data charts available, as well as paid stuff too. But check onchain.com and start getting familiar. And by the way, in the new BitLab Academy, we do have an on-chain data course, which I recommend everybody go through. Even if you signed up just to go through this course, and even if you don't go through this course, find a way to get education about on-chain data. Not because I think on-chain data is cool, because I think on-chain data is one of the most useful tools within the crypto ecosystem, because you get a real-time look into Bitcoin, into who's buying, who's selling, who's accumulating, who's distributing, how, the growth factor, the disparity between the market value versus the realized value. There's so much data that gives you, it's almost like the on-chain data. It's almost like on-chain data it's so similar to technical analysis, but it's a technical look at fundamental analysis. This is essentially what on-chain data is. And so the reason I point that out is, I did a tweet over the weekend. Let's see, it's right. Right here. So what I want you to notice is the long-term holders are increasing supply. Now, what does this mean? Well, first we need to understand that long-term holders tend to be people that are more resilient. They're stronger handed. I mean, you even see right here, this supply going up from here forward. This is a dip. Everybody's scared. Long-term holder supply started increasing here. So stronger hands. And to be a long-term holder, it's either a wallet that on average has 75% or more of the assets, at least 75% of the assets that don't move, they're basically just held, or coins that once they're bought, they're held for more than 155 days. Okay. So you kind of have two different sort of aspects there. But what it means is they've done a lot of statistical analysis and looked at, if a coin is held longer than 155 days, then of course, think of any 155 day period in Bitcoin. There's always volatility. If somebody holds longer than 155 days, that a little over 3 months, 4 months, I guess it's almost 5 months. But if you're holding through the ups and downs over that period, you probably have a longer term time frame in mind, and you have a strategy at least in place, whatever the time period is. But if you're holding for that duration of time, you're not affected by this sell-off. Look at this sell-off, increased supply. There's a little reduction here on the fear. This is, when we're having the cascading, we had the Celsius and we had Three Arrows Capital, then we had Luna, then we had, so there was a little bit of shakiness here, but ultimately this long-term holder supply held through this volatility. And then once we got down here, which would have likely been the trend cycle floor, the bear market floor, had the FTX not then been uncovered, and then we had that sell-off here. So, but even so being this kind of coming sideways, when this decreased, we had a little bit of a sell-off, but then a small increase. But then this right here is incredible, because we can see as we reach back to these levels, very obvious spot for people to be taking profit. And this was also a big move, 15.5 up to 26,000. That's a $10,000 move, especially with any of these smarter players that were using leverage. That could have been a multi-$100,000 move for them in profits. So there was some risk taken off the table here. We see that reduction in supply. But what's interesting is this right here. I marked it in green, and we can see this. The supply is going up on this pullback. Now we have a couple more charts here. We can see this long-term holders, strong hands, net position change. So we can see this is also similar. We saw this increase. This is essentially, when this is green, this means their supply is increasing. The amount of supply held by long-term holders. And we can see pullback, increase in supply. Strong push up, decrease in supply. Now you think that'd be bad, but you know what they're doing is, look, they bought all through here and here and here and here and here. So what they're doing is they're taking profits into the strength of the bull trend. That is the key that we all need to get used to. And we can see right here, look at this reduction in supply, very similar to what we were just pointing out on that other chart right here. When we got to these levels, previous this whole zone, this $25,000 zone, reduction in supply, we can see that playing out right here. because there's a reduction in supply right here. Now, the next chart is going to be very telling for us to understand what's going on here, because we can see that there's a large increase in supply on this dip. So it leads me to believe that there is a potential, that there is a potential that what's happening right now is, I don't want to call it a coordinated manipulation. It's not that. The markets manipulate themselves because by nature, majority of people in the markets are emotionally tied to their trading strategy. They cannot break out and get, basically you need to be as much like a robot as possible with your trading in order to trade effectively, because it needs to be data driven, not fear or hope from price. Okay. And right here, we're seeing a sharp increase of strong hands. People that don't fear volatility, they're buying the dip. And if they're buying the dip and they tend to hold for 155 days or more plus, then what is this saying? Well, let's look at the next chart. Well, we can see right here, look at this. This is the short-term holders. This is a weak hands position change. Now, right here, look at this. There was some buying here on the collapse. That was smart. But then directly after that, reduction in supply, capitulating out of their position in the small movement. Now here, this is where it's interesting. Right on these two peaks right here, sharp increase in basically sharp increase in supply for short-term holders. They're buying from who? The long-term holders that are taking profits, and the price comes back down. Okay. Now what we see here is they took profits. They sold to long-term holders, and then the price continued going to the upside. Okay. Now here they increased supply, and now the short-term holders are selling at this point. Now, if the short-term holders are selling at this point and the long-term holders are buying at this point, long-term holders tend to have a better grasp on what's happening in the market. So it's just interesting to see what's going on. Now with this chart, each time the Bitcoin price has successfully broken through the short-term holders realized price, which is this line that's kind of slicing through, not the price, but this, you can see right here, the trend signal line, the short-term holders realized price, this dark pink line. Each time we broke it through it, which is this green line, and not basically broke through it and held support, this has been the start of a strong bull trend, especially when Bitcoin has already tested the short-term realized price and has broken into the hope zone, which is this, I don't know if that's, I guess, brownish. Yeah, it's this line right here. So we broke short-term holder realized price, and we broke into the hope zone above the capitulation zone. And then this acted as a support until we ultimately got above all these bands into a very strong bull trend. Similarly right here, although this doesn't look all that big, this was a multi-100% move to this pre-halving pump, and then obviously a pullback. And then global economic shutdown once we broke right back above it, and then immediately we broke the hope band here before the short-term holder realized price, but this ultimately resulted in a about a 900% pump or so, if I remember correctly, 700% from here to here. And what we're doing here is similarly, look at this. Look at these two lines and what happens to price action afterwards. So there are bullish cases for price action as it stands right now. The question is, have you hit that like button? Have you hit that subscribe button? Join us here in our community. Let me know in the chat where we're looking at right now on the price action. The last movement you made in the market, was it a buy or was it a sell? Or what? Put a 1 if it was a buy, put a 2 if it was a sell, put a 3 if it was just adjusting a stop loss. Let me know what you're doing with your portfolios here, and then also put Bitcoin if your last action was with Bitcoin, and put altcoins and then the altcoin if the last action was with a particular altcoin. Let me know. And also start after you do that, go ahead and start throwing in some of the altcoins that you'd like me to. We're going to be doing some TA on a bunch of coins towards the end of the show. We've got quite a bit of time left. I'm going to have a sip of water here. I'm going to watch for your answers. Water. All right. So I want to look at, so I'm showing you the bullish case because it's always, sometimes we need that hopium. And, we have this support level right here, and we can do option F from the bottom. from the bottom to the top. Okay, look at this. Golden pocket is right in this blue zone that I have, which is probably roughly about, let me look here. Where is market valuation, cycle valuation? I'm so proud. I mean this humbly, but I'm so proud of an on-chain metric that I created being hosted on an on-chain data site. This is my on-chain metric that I created about 2 years, a year and a half ago that I got plugged in here. And you can read about it down here if you want to get a little more info. I also talk about it in the BitLab Academy on-chain data course. But if we kind of zoom in here, so yeah, this has been climbing up. So it's almost at 24,000. This is particularly bullish for me, because if price action, remember what we were talking about, once we lose the short-term holder realized price, then it has marked very strong, basically bear markets. Even right here, lost it, and then it acts as resistance. So we are still above it. So it's critical to me that this is why I had this here. This was because of where the short-term holder realized price was. I'm watching this kind of as like, not a line in the sand, but an ultimate buy, because I'm still bullish on the potential of where Bitcoin is going pre-halving, with likely a strong correction afterwards. But this is that level. I'm buying anywhere in this zone. I have multiple buys kind of in this zone right here, because this is, if this does break down, we have the short-term holder realized price right here, which is also the golden pocket of this entire move. So this is very strong support. This is a very key level of support. It would be a washout below this sort of zone right here that we could see. This is a 24/7 to 25/2 level, which is, this huge zone that we had trouble breaking out of. So if we did wash out down to this level, get a wick down, and then come back up, that would be ultimately very bullish for us, because we'd be testing the short-term holder realized price again. And if we do hold it, it's a double confirmation that, especially if we test it and have, velocity and momentum to the upside, it's a strong confirmation and a great opportunity at these levels. If we do break down below this, of course we have, the next level would be this sort of brown box right in this region. So is it going to? Well, looking here at the 8 hour, we have a blue wave coming in on the BitLab significant movement. The momentum indicator is showing is a little undervalued. What does it show on the daily? Okay, it's flipped. Okay, look at this. It has flipped. Let me take off my face. It has flipped the significant movement, which is this one down here, an aggregate of a bunch of different momentum indicators, and showing when things are overvalued or undervalued, overbought or oversold. When it's blue, it's undervalued. When it's red, and undervalued, opportunity for trend cycle bounce. Okay, red means it's getting very overbought, overheated. Likely will either consolidate or reject soon, and we see this pushing up and then it rejected. But then we see this right here, the relative extrema. This is flipped gray now, means it's neutral. The relative extrema is showing that the movement to the downside was very, very unhealthy. And we can see this right here, unhealthy all the way. It can go out, it can play out for quite some time. But then as soon as we got the blue, boom, bounce. Right here, unhealthy coming down. As soon as we got the blue, bounce. So what we're watching for right here is the fact that we are getting some underlying bullish indicators along with the on-chain data metrics showing some bullish case for what's going on, but we're still seeing some chop in here. Now, what I want to point to is, I'm going to take it away from crypto for a second. We're seeing blue dominate here. God, this very well could hold. I'm still thinking there's likely a little bit more of a washout, just to commit more people going short. But one of the things that we want to keep an eye on is, do you all remember this chart that I shared? I've shared this a bunch, but look at this chart and just come to my page if this is your first time here, and download this chart and just read it, because the whole point, and I made this back in January, and this is essentially exactly what's happening. We're at this stage right here where Crypto Savvy and a bunch of other people are really sure it's going to go to $7,000. So as soon as we're getting up to this level, they finally get their opportunity to feel a little vindicated from a pullback. But this is what smart bulls are planning on too. Having a pullback, retesting, and look at this golden pocket, this conservative bull entry. What is that would potentially be as low as I could see it going right now. But we've gone exactly into this level right here, this $30,000 level. We're getting a pullback. We'll have to see how far that pullback is. And then, something like this. But the point is this right here, smart money accumulation. Smart money accumulation. Suckers rally. Suckers rally. Okay, because we're still in a downtrend. We're coming up to resistance at these levels, getting rejected. So we're in the basis of forming strong, the next leg of the pre-halving pump, which very well could get up all the way up to the $50,000 range. I don't particularly think it's going to get up to that high of a level because of the economic conditions. I do think we will likely get somewhere in the 37 to 42 range, especially on a weekly close kind of deal. And then a pullback, scare everybody out again, come back to the $28,000 to $30,000 range. And then, into this is a halving here, and then a strong push to the upside. Okay. But what we have to do is we have to contend. We're not just in the Bitcoin market and the crypto and digital asset space. We're not only looking at that. If we really want to succeed, we need to be aware of things that are expressing pressures on the risk side of markets. So coming over to this right here, this is the earnings chart that's coming out, this week of April 24th. We got Coca-Cola, Phillips. I thought that said stir fry. I was like, stir fry? We got First Republic Bank. That'll be an interesting one. This one's going to be probably not a good number. We've got Visa, UPS, Verizon, Boeing. This one's probably pretty. They've had some issues. Meta. I still think they're going to be hurting just because of all their investments into the metaverse that haven't panned out yet. Amazon, Intel, Chevron. I mean, I think even Alphabet's on here somewhere. Microsoft, Alphabet. I mean, there's so many. Pepsi, Spotify. This is a big week for earnings, and this is coming right at the doorstep of. The next. When is the next FOMC meeting? May 2023. I believe that it is around May 3rd. Let's see. Yeah, May 2nd, May 3rd. So it's going to be a 2-day thing, of course, and then the termination is on May 3rd. And again, what is FOMC meeting? Who cares? Federal Open Market Committee or Commission, whatever it is. Jerome Powell, the Fed, determining how much interest rates are going to be. But I don't care. I'm buying Bitcoin to get out of the traditional finance system. I commend you for it. If you're completely non-emotional and you have a 10-year horizon, just buy and don't care about this stuff. If you're trading with any sort of regularity whatsoever, you need to be aware of what the pressures are on the market. And maybe I wouldn't say trade the FOMC meeting, trade that it's coming up, but be aware that there's a lot of hope and fear and uncertainty of what's going on in global markets right now. And global markets have a huge impact on where liquidity is in different financial markets. And financial markets and liquidity and how risky people want to be depends on how stable they think the market's going to be over the next, 4 months to a year, because markets are forward looking. So if interest rates come in higher, then that means it's more expensive. Money becomes more expensive because basically they're putting the basis point, the interest rates are the base charge that the Fed charges any bank loan. So if you want to take a loan from a bank, then their percentage goes on top of whatever the Fed percentage rate is. So that therefore money becomes more expensive. So then therefore there's less liquidity in markets. And because there's less liquidity in markets, less spending happens in markets. Therefore earnings start to suffer. And so this becomes 6 to 18 month sort of plague that happens in markets known as a recession. Okay. And so we need to be aware of this, because now, while I would love, and I hope I look forward, I look forward to the day that Bitcoin truly breaks away from traditional assets. But as it stands right now, there's not enough retail interest coming into Bitcoin, new retail interest, to support, massive upswings in price action, because new retail is not smart enough. And I don't mean this in any slight against them. It's just necessary ignorance, because they haven't looked into these markets and understand how to look into the fundamental data, the on-chain data, have a long-term time horizon. They see, oh, price was at 70,000. Now price is down, it got all the way down to 15,000. They don't trust it. They don't buy, going back to this chart, right here, going back to, where's it at? Going back to this chart, hype buyers. This is where retail comes in this zone right here. New retail does not come in, unfortunately, at these. Look at this. If you bought right here, this was the $3,500 range, up to 64,000 or 69,000, or even here, 3,500 up to 13,800. Smart money are those that look at data, not the price. Retail is not smart money. We all can be a small cohort of people that do this differently, that act as smart money, even though we may have much smaller wallets. But the point is, we want to build them. So we need to be aware of that. Now, I had a couple other things I wanted to share. I don't remember what it was, but yeah, I want to throw it back over to chat right now. If any of you have any questions, I want to make it a point too, towards the end of the show as well, to be able to interact with you all and answer some questions. And Karen Swigart Harris, Kelly, BitLab Academy always brings the best charts we didn't know we needed. Oh, thank you for that. I appreciate that. FOMC day, the scam wick day. Yeah, you know it. Matt, who is that? Ian, my boy Matt C's in the house too. Yeah, Gregory Gresick, what's up, brother? So I want everybody to think of your trading decisions as a relationship with the loved one. Anytime you do things out of spite, out of fear, out of attachment issues, out of past trauma, has it ever ended well? No. It becomes more inflammatory, more emotional, more charged, and more damaging. Now, if you do things patiently, even in the heat of the moment, if somebody really makes you angry, I forget who told, I think my grandma told me or something when I was young. She goes, you need to learn to strike when the iron's cold. I can tell you right now, looking at Bitcoin charts, the iron is cold when you're in these zones down here at the end of a bear market. The iron's still cold when you break out of this massive downtrend resistance that becomes support. It's an opportunity. Now, do you capitulate here because it came and you have a lower low? Depends on your conviction, depends on your timeline. For me, iron got colder. So if this was an opportunity, this is a better opportunity, right? Similarly, you're excited here. How could you not be getting more excited as this is coming down? As, if we look at this on the 3-day chart, remember, I know some of this stuff is repetitious. Stick with me on the repetition, because you got to get it through your head. I know how long it took me to get some of these things. I put thick. Why did I write thick? I don't know. Having. It's thick. You got to remember the schedule. 4-year cycle. This is the Bitcoin mining, the halving of the mining rewards. Okay, we can start here. Post-halving, large pump, pullback pump. Bear market. This is halving, pre-halving pump. Remember, we measure this. That was 124% pump. Come over here. This was from the bottom, actually. Nobody would have gotten that. That was 87, but all the way up there, 104 okay, so we had a little choppiness. Now let's do it from that. All the way up to the top of that was 100 121% pump. Then to, actually, is this a line or that's a wick? Okay. All the way, so 121% pump. Everybody's so excited. Somebody bought the very top of this. And then 41% dump. Somebody up here sold down here. And then somebody who's more patient bought here and sold here to somebody that had hype. Because you see that 121% pump, 41% dump, 60% pump, 24% dump. You see my point here. This is all pre-halving. And then what we get, this is the point. We have sideways, we get some up action, a little correction, and then we get a parabola. Okay? This is the basics of the 4-year cycle. Now, of course, after you have the parabola, which is same thing here. Up, down, parabola. In this case, we had 2 tops. Now, similarly, here, we're getting the down, right? Which is this down here, right? So let's call this a 1. Oops. Let's call this a 1, this a 2, and this a 3, and then this a 4. So we have, actually, let's call this a 1, 2, 3, 4. The 3 would be the correction. So we have the 1, 2, 3, right? 4. Similarly, we have 1, 2, 3. Oh. 2, 3, 4. Okay. So we need to pay attention to these because this is, let me delete all these so they don't mess up my chart. You could do it. The point is we have a regularity. We have a roadmap based on what's going on in the, there we go. Okay. So that's where we're at right now. We're just playing out the same cycles over and over again. And we have earnings reports this week. And these earnings reports are going to lend themselves to all the other economic data that we've been getting from the CPI, the PMI, the PPE, the ABC, the 1, 2, 3, all these damn acronyms the government uses just to obfuscate what's really going on, because they try to tell us the inflation's 8%. Let's be honest, at the, a couple months ago when some places eggs were $9 a carton, that was, as a whole, I can't agree with inflation having been less than 12%. I think it was somewhere in the 16 to 18% places in some places. Yeah. So to Chemistry Bro's point, yeah, he said something here. If you look at the Bitcoin to verse money to M2 money supply chart, we actually touched 12K sort of. We tapped the same Bitcoin M2 ratios when we were at 12K pre-bull market. Yeah, that's a good point. In addition to that, if you look at this bull market, if you look at this market structure, if you look at this price action structure on this chart, utilizing the MT money supply instead of US dollar, you would see that this was a lower high. So this would have been the true market cycle high, but inflation happened so quickly over this last cycle because of the 3 trillion, plus printed from the government, that the inflation had a big impact on the value of money. So it took more money to buy Bitcoin, that the value of the dollar was less. So therefore, so if you look at this, let me see if I can find it. I can't remember how to do it. Is it BTC 2? I don't remember how to do it. BTC. You know what? I think I have it saved on the right-hand side. It's over here somewhere from like 2 years ago. Hey, Chemistry Bro, throw me in the Discord. Send me the what the ticker is for that. I can't remember how to pull that up. Just too many things going on in my brain. But the point is, what's going to happen? So let's go ahead and go through some charts today. I got a bunch of charts from. Let's see. Okay, so let's go ahead and break this down. So what's happening? We're going to break down a bunch of charts now. If you like what you see on this channel, even if you don't, if you like crypto, hit the like button, hit the subscribe button, ding the bell. I really appreciate it. It really helps this channel grow. It also helps the crypto ecosystem grow. And again, make sure that you where's it at? Make sure that you come over to BitLab Academy page here. Follow this at Academy BitLab. Follow us and retweet and like these posts each day, because we do a random drawing on Friday for each day of the week. And so this is how you enter, and you also help support the channel. We'll be doing that drawing on Friday. So looking at these charts, let's break down what's going on. We looked at all the macro stuff. Let's get down. Let's look at the 2 hour. We're doing this together. We're figuring this out. So let's actually go to the 4 hour. Okay. Now let's make this small. Let's look at this. All right. So looking here, we broke this low. We also have a lower low here. So although we are on the support channel, and this is, we do have relative extrema out. What I want you to notice on the relative extrema is we had up and down. So it's kind of like it's uncertain about what direction it wants to go. The underlying, not the indicator, the underlying data is suggesting that the market is uncertain which way it wants to go. Now, looking on this time frame, this is a trend we want to pay attention to. In this case, we have a downtrend that is also increasing in velocity. How do I know that? This is rounding. So this is increasing to the downside. However, this is, if this can hold sideways here and then continue up, that works too. We could also form this W pattern here and come to the upside. But this, as it stands right now, is on the weaker side of bullishness. This is more on the bearish side. If we look at it like this, hold on, let me come here. Let me go like this, double click, bring this down. If we look at it just like this, because if you have it zoomed out like this, sometimes you can't see stuff. You want to look at things in different shapes on your chart. Looking at it like this looks a lot like a bull flag, doesn't it? Without it zoomed in as far as we had it. We've got the essentially bull pennant, bull flag. But we can see if this is the case, option T, let's go ahead and come like this. And I'll do this on the conservative side. Let's say we don't go all the way to the end. Let's do it right here. And I'll do it from the bottom instead of the top. I'll just do it on the more conservative side about where this may go. And look at that. Even if we went all the way to the bottom, look at that. This is crazy. I did not pull this up before the stream. I'm doing this live with you. This is this bull flag. Bear flag. This bear flag target is directly to this previous high. This whole previous range that we tried to break out of, and we finally did. And then now it's full bull. Well, we've got to test the resolve. We got to test the resolve of the bulls that are in the market. And if we bounce here, maybe we get a wick down into this golden pocket or not. But if we bounce here and come up, then the next target above us is going to be retesting this level here and then coming up to the upside. So that's what I'm seeing for Bitcoin. Now, coming out of Bitcoin, let's look at Cardano. Let's go to the 3-day auto. Okay, we have this massive downtrend. We have this weird, the relative. By the way, we have a bunch of updates coming to the indicators. We've been working on a bunch of updates that we'll be rolling out along with about the same time the update for the website comes out for BitLab Academy. So we had this massive downtrend broke out round. Now we got this rising channel here. Let's go to the 12 hour. Okay, we have this rising channel here, falling wedge breakout, bull flag breakout, descending line breakout, rejection at this rejection at the top side of this range of this channel, this rising channel. Rising channels are inherently bearish. At some point, it might break to the downside. That's exactly what's happened. And we came right down to the target that I had set, which is the previous high here, especially with this, weakness that we see here. Now, is this going to be similar? I'm sure a lot of the coins are going to look very similar. I'm not even going to draw the full flag here because we can see it. But if we drew this out, this would be fairly bearish because then we'd also be losing this structure here. I'm going to go ahead and move this just a little bit to... I don't know where to put that because there's an argument to be made. there's a bit of a line here too. Why did I see that? I'll tell you. I saw that because this is a rejection. Let's go ahead and zoom in on this. This was a rejection where this is support, support, support. And this is also exactly where we got support here. So if we do lose this level, we could break this level, but I think there would be some other structure here to actually not prevent, but I don't think that Cardano is going down to, it could. I don't think it's going down to 33 cents. I think if we lose this level, we'll likely test sort of in the 34 to 35 cent range if we continue down. But what I would say is probably most likely is if this does come down, it's going to be like this. And so it would kind of be around the 35.8 to 36 sort of range if Cardano continues breaking down. Now, if this is able to bounce, then this is, we'd have a W formation here, meaning double bottom, right? So we have the invert, we have the head and shoulders here. We see shoulder, head, shoulder, and then this broke down. Now this is a bottom formation. If this price action comes up, if I let me go like this. Come on, chart. God dang it. So if this is able to go down, up, down, if this is able to break this high right here, we may have a reversal in place that's going to reverse this back to the upside. But we need to see how this plays out. So that's what I'm seeing for Cardano. As it stands right now, this is looking more on the bearish side. However, looking at the signals, this is the 12-hour. Let's look at the daily. This is looking overheated. So although the structure looks bearish, the underlying data from the indicators is showing that momentum and the movement of price action is likely finding a potential bottom. I'd like to see a blue flash here, but we might not get it on the daily for a while. At the 8-hour, look, strong blue. And we got a bullish. I can tell because I can see the green flag. God, I hate this freaking paintbrush. This bullish divergence that we have right here. And this is starting to stick out just a touch, but this was leading into it showing unhealthiness. But now all this is within the momentum wave. Momentum wave is trying to work its way back up towards the zero line. And we got the blue wave here. So if this flashes back to gray, I'd be a little worried because that means some weakness is coming back in. Or if we get a small attempt to the upside with the relative extrema, with the bar sticking to the upside, that would suggest that if this is moving up and there's a bar outside of this wave to the upside and this flips gray, then I would think that we're also likely coming back down. Now that's Cardano. What was some of the other ones I just looked at on the list you guys gave me? Avalanche took a pretty big fall, which is surprising because we had on the technical side of it, we have a broadening wedge, a rising broadening wedge here. See, as we have these levels, these pretzels are making me thirsty. So we can see right here, broadening wedge, bearish, just broke down to the downside. This was a pretty substantial, pretty steep drop. It's a 23% drop from where it was only a couple days ago. And this is flipped back gray. This is on the 4-hour. This is flipped back gray. This was blue right here, meaning undervalued, likely buy. And we have the relative extrema was out to the downside. Let's go ahead and get all of them. There we go. But you see right here. Oh, yeah. So this is looking very iffy, but I do see this momentum wave, this shaded wave here is flipping back to the upside, but we are getting a little bit of a bar on the outside. I'd like this wave on the next bar or two to be back positive and have the bars within them. Otherwise, this can signal something like this, where we had almost no attempt bullishly, and it was still unfounded bullish. Lack of bearishness, I should even say, right here. And we saw the price action fall. So Avalanche looks like it could be setting up for further price action to the downside. However, I think this is also going to follow the narrative of what's going on. There's a lot of levels right here. Option J. Let's go ahead and make this, brighter. Make it a brighter day. As my dad says, bring me a higher low. That's what we want, right? We want higher lows. So we got this. We got a lot of, this is kind of a general range right here, this dark bar. And we're right on this level. So if this is able to hold this and break past this level, I think we may be in store for price action to the upside. But even with price action to the upside, this could go all the way up to 1967, which is a that's a 15% move from here, with still the possibility of getting rejected and coming down, depending on what the characteristics of the market are. So we've got to take it step by step. Okay. Now looking, come on, you can do it, chart. There we go. My computer's been acting slow. I think I have charts open too much, and I'll have like 10 different charts that all have 4 different charts on them. I think it just makes my computer just sweat on the inside. But look at this strong. I mean, look at this. Look how far this relative extrema has been out. This to me, just looking at this, is looking like they're really pushing price down versus letting it be healthy price action coming down. Now I want this to flip back blue though. That's what I really want. Oh, this is blue on the 2 hour. However, we're getting conflicting signals here. Blue undervalued, but unhealthy bullish movement. So we see this now. That's what we're seeing on Avalanche. So yeah, this is right as it stands right now. I'm waiting for it to break this level right here at the 1734, breaking above this level with some sort of continuation to the upside, or losing, coming back down and testing 1656. In which case the next level I'd be looking at is 1530. And I'm just doing that based on the price action levels right here. Now we can also do option F, bottom to top. We can see, look at this. I did not even notice this before. This is why I do the TA, just so you guys know, I do the TA live with you so we can figure this stuff out together. This price action, where did it come down to? What is this right here? The golden pocket. So the question is this going to be enough to hold not only golden pocket, but also previous price actions? See all this price action, all this volume? Is this going to be enough to hold this? I think this is not going to be on its own. This is going to be taking the lead because the market is uncertain right now. Things are going to be taking the lead from what happens in Bitcoin, and Bitcoin is taking a little bit right now of the lead from the uncertainty in the market. So, of course, we've got a lot of looming things on the horizon with what's going on with Gary Gensler and what's going on with the congressional hearing he had. Potential ending of the XRP case at some point. There's a lot of things going on in the market right now. So I really, really want to encourage you all to trade level by level if you are actively trading, and be very set alerts on your charts and set alerts and have a strategy, have a plan. Now looking at my phone is ringing. Check it out. I'm sorry, I do not need anything. You can give me your number. I'll call you at home if you like. No, yeah, I don't need you to call me here either. Thank you. Savage. So, I just get so many telemarketer calls. So here we go. Let's look at XRP, and then we're gonna dive into a couple more coins here. This is the same thing. That flag we were talking. I don't want to do that. Option T. This is that flag we were talking about. So what does it mean? Let's go to the 12-hour. This could be a flag for another leg down, and the leg down goes right onto the point of control. This very well could be likely, especially if we get any sort of negative news or headlines or further allegations from the SEC, all that kind of stuff. But just looking at the weakness in the market, just on a technical level, this came into a level of resistance there. This is just, looking at this kind of looks like, I hadn't noticed this before. This kind of looks like no, won't even do that. The bottom support here. So if this comes down, I would be a buyer. I don't know what you would be. It's up to you. This is not financial advice. I have some orders set to this large volume node that we have right here, point of control, this red line. If you notice, see how that red line moves? Okay, it's not looking like it's moving right now, of course, while I'm showing it to you. Okay, give me a demonstration chart. I guess that's just where most of the price action. This red line, for those of you that don't know, moves to where the point of control is, the highest node here on the VPVR. So apparently that's just the exact perfect point of control on all time frames. I did not have breakfast this morning, so I am a little hungry, a little hangry right now. So point is, I would be a buyer in this region right here. I think that this would probably be short run a little bit on basically this volume node here, which essentially is all this price action, some tops, some bottoms. See all this sort of zone right here. If this breaks down, I would be a buyer anywhere at this region or below. And this is all going to depend on what's going on in the markets. Because things are kind of follow the leader right now, unless there's positive news. And with AVAX, the reason I was saying I was so surprised that it pulled back so much was the fact that they have a big Avalanche Summit that's coming up in only a couple of weeks. Maybe there was a large push up in speculation of that, and then the market pullback just got people to take profits on that push up. So I don't know. But now looking here, let's go ahead and look at Algorand. I saw the mods sent me, some people had asked for algo. Where is algo on here? You can read, Kelly. You can read. Okay. Now, a lot of lines. What the hell are these lines? All right, let's go ahead and zoom out. Okay, so we've got some interesting price action. 2 points, point. So this is kind of irrelevant now. So we'll kind of go like this. This has been, a lot of points. So now looking where we're at here, this is option T from candle body. All right. Now coming in here, this is looking, this is on the 3-day. What a fall there. And of course, there's a lot of, Algorand was recently news in a lawsuit against Bittrex saying that they're selling an unlicensed security, being Algorand, which is part of the reason that some people, I mean, I even took some profits out of Algorand and moved it, reallocated it into a couple other coins. Because I was up on it anyway. So I took some profits and I'm very glad I did. So here, same thing as we saw in the other coins. We're seeing the same thing repeat across. Now, basically, let's go to the 4-hour. I was on the 24-minute. We have this flag here, but I will say we are looking like we're getting a bit of a floor here. However, look at this from these 2 points. It's interesting here on Algorand. If we kind of zoom this in, these 2 points have now, this has fallen through those 2 points and acted as resistance now. So does this mean that we could be seeing more downside from Algorand? It very well may. Now, if we were to take this measurement out, this would be not only down to that, but it would break this level. I think that there's more love in the algo community than this completely breaking down. I think if this would break down, I would be looking at this target, somewhere in this region, 16.5 to 17 cent region, because that's still another 10% down from here. So that's what I'm seeing there. Let's do optimism. I saw some people ask for optimism. Okay. 4-hour option T. It's kind of an ugly triangle, but a lot of weird different touching points. So optimism is looking, just structurally it's also a newer coin. So it doesn't have this large fall that it looks like it came from. So by nature, it's looking more bullish. This is looking like, I wouldn't call this a bull pennant because this is much too large. It looks like we're getting a bit of a symmetrical triangle. So then what we could do from here is option T, measure from this point to this point, and then sort of measure that out to there. And that would be target if this were to break out. This wouldn't be immediately because we're on the bottom side of this range. This would give us a target somewhere in the 550 range. But again, this coin I think it still is going to follow the leader a little bit. However, we have to remember that it had an incredible partnership with Coinbase, that they were basically a partnership with Coinbase for them to do their, I think it's called Base, or what's the name of the token or the protocol that they're doing on top of using Optimism? I can't remember the name of it at the moment. All righty. So what I'm looking at for Optimism would be, this looks like, first off, option F, give us a Fibonacci from the bottom. If this is weak, this may just linger below this 382 and then break to the downside. If we kind of double click on this and we look at the actual chart data, we can see this was blue all the way down, but we've gotten the bounce and we got very little action with this. The relative extreme is sticking pretty far to the downside here. Very little action to the upside, and this is flipped back gray. So this is flipped back gray, meaning that the momentum indicators moved quite a bit into the neutral zone while price action hasn't moved that much. So this is indicating a little bit of weakness to me. This very well may, if we can't get above this high here at 231, then this may be tapping here and looking for a potential downside, in which case I would be looking, we got option J, that target, and essentially those are the two levels immediately below that I would look at for Optimism. But with that being said, dang it, I'm going to slap myself every time I say that. I love you all. I've got to go. I'm going doing some charts on BitBoy Crypto. Come get active in the chat there. Hit the like button, hit the subscribe button, ding the bell here in our chat. Join our channel if you have not yet. It's right over here at BitLab Academy, youtube.com/BitLab/@BitLab Academy. We're just shy of 6,500 followers, subscribers, community members. That's what this is all about. So make sure you go, regardless if you watch this live or if you're watching it later, make sure you come and follow all of the socials down here. Go over to bitlabacademy.com and sign up for the newsletter right here. You're going to be one of the first to know when all the new stuff rolls out. There's going to be some fun stuff that we send out with that. And you also get entered to win free courses and stuff. And this is just at bitlabacademy.com. And of course, the new website with all the new courses is coming oh so soon. So go over to BitLab Academy now, sign up. It's still the old site, but you basically will be able to keep that lower member pricing for the life of your account if you sign up before the new updates go out. And of course, all the indicators that I talk about are right here at bitlabacademy.com/indicators right here. And you can use BitLab15 at checkout for both the courses and the indicators. Just right under where you put your name and above the payment section, there's a button that says have a coupon. Click that, put in BitLab15, press apply. You get 15% off. With that being said, I didn't finish it. I love you all. I hope you have a wonderful day. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. Like button, subscribe, and be my friend. That like button, sucker.